All righty. Good evening, everybody. Just getting some things started. All righty. Welcome to Hurley Investments Trade Findings and Adjustments. I got that wrong. I'm too used to the Thursday. Welcome to the Hurley Investments Market View Commentary of June 20th, 2023. Yes, you're in the right place. Yes, we told you it was going to be Monday, and then both Kevin and I forgot until Friday afternoon that we get a Monday off with our market, which was a pleasant surprise. So, um, trying to get things circled in here, running a little bit late. I apologize. We have our usual briefing, market commentary, live market analysis, big picture. Talks about kind of the bounce, the bullish run up from March 10th. March 10th, they talked about having a capitulation. Where did they talk about that? March 10th, the market cap weighted S&P 500 has surged 14%. Nasdaq composite has soared 23. We're surprised immensely, they said. Now we don't want to top tick the markets unsuspectingly, like we unsuspectingly timed its first quarter bottom, but by saying it is only an onward and upward from here, but it seems like it will take some special forces to derail this bullish bias. Talked about June swoons, typically what we get. This month, not so much, however. Last year, we had a big run in June and July. The month of June hasn't seen any swoon, only swagger. As of this writing, the Russell 2000 is up 7%, leaving up 6.5% for the year. S&P Midcap 400 is up 7.2, leaving it up 6.2 for the year. Nasdaq's up 6.5, leaving it up 31% for the year. Wow, it's kind of hard to believe. S&P 500 up 6.1, leaving it up 15% for the year. Blah, blah, blah. Reading between the monthly and year-to-date return lines, one should be able to tell that the market wasn't doing well when June began. Best tell in that regard, however, is the equal-weighted S&P 500, which shows no market cap favorites. It was down 1.2% for the year, but after a 7% gain in June, is now up 5.7. That is a solid return on an annualized basis, and it doesn't include dividends. If you guys were here just to comment on annualized, if you guys were in my commentary on, what was it, June 5th, a couple weeks ago, annualized returns, we talked quite a bit about that, which are just average returns with a different name. Talked about some awesome, interesting, yet nerdy facts about average returns. If you didn't see that one, I encourage you to go back. I don't feel like I need to go over it again right now. Cutting through some of the nonsense here. In brief, we had a better timing on equal weighted call, but it's still not better performance. Ideally, that will change and the performance script will be flipped. We say daily because the outperformance of the broader market would suggest there is more confidence in the outlook. That mentality has been a driver of the market in June. So basically, we got to run into the Fed meeting. Was it last Wednesday? What? Yeah, must have been. It was like the 14th, where they chose to pause the rate hikes. No rate hikes in June, but they're thinking that there will be still two later in the year. Obviously, that can change, but running into that announcement was that expectation that there would be a pause. And at least for the rest of that week, we got a good run. 15th, 16th topped out at 444, 4,448, 47 was the high. Overbought today. We're just coming off of overbought. So what it all means, it will be a tall order for the stock market to keep performing the way it has, although there's a ton of dry powder sitting in money market funds that can be deployed in a risk-on move. So basically a bunch of money sitting on the sidelines or just in money market funds. I would also add there's probably a lot of money in money market accounts. Is sitting where it is, though, because interest rates have risen and capital preservation has been the primary aim. In other words, there are plenty of doubters still when it comes to the performance of the economy and the stock market. Any attempt to work back toward the prior all-time highs will require a conversion of the doubters, but such a conversation could be an elongated process as market participants respect a history of weaker economic outcomes following a tightening cycle. So, they list some things to watch out for, which I really liked. Here's the things that the bullish bias for the market are looking out for. Weakness in the mega cap stocks without a rotation in other stocks. Initial jobless claims running consistently above 325,000 and the unemployment rate lurching higher. The Federal Reserve raising rates more than expected because core inflation sticks at levels well above 2% target. More acute economic weakness that triggers material downward revisions to earnings estimates. So a lot of the same things we've been talking about. Obviously, if they are going to pause rates here and if we're going to get possibly no more rate hikes, which I don't think is going to happen, but if that were to happen, it will be because some of these other things go the way that we would like. Initial jobless claims consistently above 325, unemployment rate lurching higher. That's kind of like that double-edged sword where they want to see that the employment market is cooling off, but not putting us into a recession where people are losing jobs quickly and hand over fist. If we get a Federal Reserve raising rates more than expected because inflation sticks up and continues to stay up, and instead of trending down as it has a bit, we're going to throw a stick in the way of our bullish market. and of course earnings, which some of the big stocks, Apple, some of those, the earnings have been pretty decent. Meta, Apple, those were pretty good. Looking at a chart, this run did get kind of crazy. It started to go nearly straight up. So it makes a lot of sense as we're getting to the overbought period. We're overbought on our RSI. We'll get a bit of a pullback. I would think this week is kind of that pullback week, and by the end of the week or by next week, we're going to start to see whether there's more confidence in buying into that dip, that pullback, and we'll start to build a base and continue higher. But obviously, if we don't start to see that base built at a higher low, somewhere around 43, then it will probably, because one of those things we just discussed is not coming through, and the bottom might not be until further down here at 42 or 41.50-ish, where our 50A is. I'm kind of in between as far as what I feel and expect our market's going to do. We'll get to more of that. Get this erased. Guys, is there anything specific that you would like me to talk about or questions that you have? As I start to copy and paste some of these things in. As far as Kevin, obviously, since you're here, you probably got his email. He's at a youth camping trip up near Yellowstone, which is pretty typical for him in our summer months. And obviously I'm taking over. Jim asked, opinion on JP Morgan's outlook for Baidu this morning. Yeah, we can go over Baidu. As far as today, yeah, I had my eye on Baidu. Was holding this 143 pivot point, and I know it had just touched that overbought point. So technically speaking, today I kind of just felt like leaving Baidu alone as it was holding that pivot point, coming off of overbought slightly. A couple times it's done that. Not quite over on this point right here, but I still feel like our resistance level is more in the 160 range rather than 150. But let's look at Baidu News. If I can find it, Jim. I don't think it's this one. Really looking more for the analysts. Not seeing anything from JP Morgan, Jim. Was there something else I'm missing? What I've read is how Baidu is the best AI play in China. They go over this. That's basically it for those ones. I don't think I need to go too much into that. Could have been Morgan Stanley. So that's probably what it was Morgan Stanley saying it's one of the best AI play in China. It That's kind of obvious because they are the biggest and best company in China. And yeah, I don't know what to say about it. Specifically that news, Jim, other than if it's gonna help us get people investing in Baidu to push that up for us, I'm all for it. I don't really know how how close they are to Chat GPT and that. I imagine they would have come out with more if they were closer, but definitely I would think Baidu would be the main ticket for that. But it didn't help us out today. And didn't help us out, what, Friday? But I think we're just getting a whole round number, 150. That's really all I could find. There really wasn't negative news on. Usually we'll have negative Chinese news. I know we've got the Chinese Communist Party putting soldier training grounds in Cuba. They probably feel like they need to do that because we're friends with Taiwan. Who knows? But I would have thought if that was something that was really going to bother people from investing in Baidu, we would have seen some more serious selling. In fact, I'm going to open my phone right now. I just want to see what the futures look like. Baidu is up $1 on extended hours, 0.7%, almost a percent. Markets are slightly positive after hours. So my choice was I don't want to protect Baidu today because I feel that it just is coming off from overbought and a couple down days in an otherwise bullish trend, which was kind of my feeling for the market in general. However, I did feel like it was prudent to get protection on Disney, Couldn't even get up to the 50-day. Struggled to get over this pivot point, or at least stay over it. And breaking 90, I just felt like Disney needed some further protection. We'd gotten protection off that was expiring, from last week. And since the market was going higher, I felt that it could help push Disney up, but that wasn't the case since this morning, since today, and got protection back on Disney. Part of the bad news was simply that the opening weekend for their new show Elemental didn't go as well as expected. So obviously Disney gets crapped on again, but man, they've got so many shows, and even the ones that haven't necessarily done well on the opening weekend have done well over time. Some of those Marvel movies, Guardians, they're making good money on these movies. So I feel a lot of this is overblown, but right now the market doesn't like it. So thought that was something worth doing this morning, or I guess this afternoon. The other one was, not every one of you have Boeing, but some of you do. I have Boeing, and Boeing looked absolute crap. Hit that 222 level, came back down. Usually when we've got these big drawdowns on Boeing, it'll either go sideways for a period in this really volatile large price channel, or it will fall for a longer period of time. You see these ones going down, hitting these highs, coming down, pretty jagged, but still down. Another high, or at least another resistance level, dropping. Can't get above 50-day, coming back down. So I felt that we had a decent run up. We had gotten to a higher high, but that was just too big of a drawdown for me to ignore and hope that it's going to stop here and go up. I feel like we're probably headed to that 50-day again. And I do think it's profit taking, selling. Couldn't see any news. Might as well check again here on FinViz. Now a couple weeks back, they had another issue with some of their planes that was a minor issue that was going to be fixed pretty easily, and really didn't get a reaction. Still had a bullish run. Boeing racks up orders in Paris. Stock falls anyway. Boeing stock falls amid these jet orders from Paris show. Boeing stock falls. Airbus rises amid the jet orders from the Paris show. So maybe Airbus looked better for their orders at the Paris Air Show. I hate Yahoo Finance. and Motley Fool. But here's where our article is. Yeah, they want us to buy their stupid program. No thanks. Maybe it'll be worth digging a little more, but goodness gracious. Everybody really gonna go buy freaking Airbus? Give me a break. So hopefully it'll be a short-term fall, but that's where we're at for Boeing. But goodness, they're still racking in the orders. Airbus isn't going to keep up. All right. Any other questions, thoughts you guys had you want me to look through? Those were kind of the things I was looking to talk about. Again, my feeling is that this week we'll get to see how the market is going to hold up, or if it holds up, or if it just doesn't seem to people worthwhile, to investors worthwhile to continue to buy into this bullish trend. Maud asks, what is your downside target for Disney? $87.50. Not much. It could go down to 85. But if they don't get some positive news, it could go down further. So it was really more of a prudent thing to feel like I needed to get a stock that has not had any market love, some protection as the nonsense surrounding Disney kind of works its way out. So I don't really necessarily have a downside target, but technically our support level is around 85. I would love to see it stop at 90 and continue to go up when rip protection back off, but doesn't seem like that's the case right now. So where are markets going to go? Just make sure I've got the latest here. Sometimes I don't refresh. Again, I feel like we're coming off of a overbought on our RSI, and we're just looking for a level that the S&P could settle at. I wish I could get these to line up properly. I always get this one wrong. What is the ticker symbol that they like? Do. The Dow did not get quite to overbought. Didn't quite have the run of everything else. But bear with me while I get these posted. And of course, the NASDAQ. Man, has it been a crazy run in the NASDAQ though. Apple has been a big part of that. Meta has been a big part of that. I mean, check out Meta this year. It has been a steady trend up with no end in sight. That's definitely one opposite of Disney where the market has really strongly gone back in nicely for. We won't complain on that one. So technically we're bullish on all these. Where do I feel like we'll end the week? I don't know what Kevin had for last week, so I'll skip what he may have written. Let's see, 20th. I'm just going to say, I hope I'm wrong, but I feel like we're going to be down. Of course, end of June. I always got to remember that. I keep thinking end of the week. I think we might be down a bit towards the end of the week, or we start heading back up, give ourselves an excuse to buy the dip. But as far as June is concerned, I think I'm going to stick with up 2%. Don't believe we have any earnings of note. That's our, we'll come back to that obviously. And to look at earnings, that's our economic calendar. FedEx. FedEx beat their numbers. Lazy boy. That's it this week. I think we can safely disregard those random earnings that are not during earnings season. So on to our economic stuff. Not a lot happening this week for us to really, for the market to chew on, but we do have the Fed tomorrow. He's talking in an interview. I can't remember where off the top of my head that it was going to be at. We had housing starts yesterday. Which was quite a bit more housing starts. Housing market starting to kick up again. Much to my chagrin, as I'm looking to buy a new house, or really not looking because everything is so stupidly expensive. June 21st, Tuesday, mortgage applications, oil inventories, that was the day. Why aren't they showing us? That's tomorrow. Excuse me. Because June 20th is today. Eventually we'll figure this all out. Wednesday we have MBA and EIA. Once again, Thursday, initial claims, continuing claims, giving us our employment news, and then Friday, preliminary PMI. I don't know. So really not a whole lot to go off of. This isn't the big PMI, CPI, inflation numbers. It's a preliminary. So I think I'm just going to erase that. Not important. How am I looking to trade? Really, I'm just, since there's not a lot of news, any news on individual stocks, I'm going to just weigh against their technicals and where they're headed. I'm going to weigh against where the market is headed. Apple almost, can't remember what the exact number is, but is very close to hitting their $3 trillion mark. It still continues to amaze me that they were the first $1 trillion company just like a couple years ago. They're already at 3 trillion. I hate to say it, but Apple is fully valued. But kind of a hard one to sell off if we're wanting to follow the market, at least to the positive side, to a good degree. It's got our tech trend in it. It's got everybody's 401ks, mutual funds in it, continuing to buy and buy. They've delivered so much value to shareholders, share buybacks. Can't see us letting Apple go anytime necessarily soon, unless there's a reason for you guys individually needing to take a profit on something. Not looking to do anything for Apple. I talked about Boeing, Bank of America. Just kind of go through some of our stocks here. Bank of America, I felt they were good bouncing off of that 50-day. Really need to see it test that 2850 before I'd want to have protection on. And for heaven's sake, our bank stocks should be going up. Baidu, we talked a little bit about that, so I guess I don't need to go over that. Unless we break this steep trend, it's going to be hard for me to adjust, or to, excuse me, justify adding protection for Baidu. Talked about Disney. let's see, Ford. Ford worried me a bit earlier, but it had come bouncing, roaring back, and I think we can forgive it for having this little pullback on a ridiculously quick vertical run up to 1450. But this one I've got my eye on rather closely. It has another one with the stock market with several other stocks I've shown you kind of coming off of overbought. Ford hasn't been overbought in ages, but they're just getting some good market feelings because of their EVs once again, and we won't complain about it, but 1350 kind of worried me that it wouldn't get above that, and it blew right through it. Now 1450 might be the place where we keep an eye on, but we'll see how the next few days go. Got a few people in Google that's going sideways, struggling to get 125 over 125, which is fantastic because we have covered calls at 125 for those of you that have Google. That couldn't be a more brilliant place to have covered calls. JP Morgan struggling to get over that 144, but had a nice recovery today. Similar to Bank of America, don't really want to have to protect that, as they should be continuing to get good benefit from all of the rate hikes. Paused in obviously last month, but those rates are still high. Talked about Meta. Only thing I can say is maybe we'll look at when we have another pullback from being overbought, but right now that's not happening. Love to just sit back and see Meta on its run. Under Armour 750 is kind of my line in the sand there. Can get back to 7. Another one like Disney that kind of is just getting crapped on for not very good reasons. Visa going sideways between 220, call it 222 to 233. Another one we have covered calls on, and you can obviously see why. Guys, is there any questions? Kind of wanted to just hit some things and let you know on charts what I'm looking at, what I'm keeping my eye on as Kevin is on his little trip, just to make sure you guys know I'm on it. Thanks, Maud. And that's really all I had for you. Is there any other questions I can hit? Going once. Thanks, Jim. Going twice. Wish I had some more articles. I was running late from being ridiculously busy today. Couldn't get new articles for you guys, but I'll probably try and find some when we get those posted. All right. Thanks, Abraham. Thanks, you guys. Take care. Obviously, I'll be back Thursday to chat with you guys. So Obviously, you're welcome. Please join Thursday, 10 Mountain Standard Time if you can make it. Good night, guys.